Hello and welcome to the Trading Zone. I'm Joe Teague, portfolio manager at Equity Armor Investments, and with me is Brian Stutland.
Hey Joe, how you doing? Happy Monday here. We're trading it up as normal. As always, we love to get into the volatility landscape, and later on in the show, we're going to get into some of the macro trends that are going on. Joe, you have a little theme, fable, maybe advice for people before we get into the vol picture?
Yeah, well, let's say the advice is directly related to the vol picture. Just quickly, let's take you to our website where we got our blog up. Of course, subscribe to this. This is absolutely free. This is the story I was reading to my children this weekend. And the ant and the grasshopper. It is a story about kind of preparing when times seem very good, preparing for the lean. Absolutely, that is what we should be doing now because we're ending summer and we know volatility picks up in September in a big way. So remember, September seasonally a very volatile time of the year. And the story is basically all about how great things are in summer and the grasshopper can just play and sing all day long. And meanwhile, the ants are just busy preparing a way for winter. They're gathering grain and yada, yada, yada. We know the end of the story. It's a very tough winter and the grasshopper did not prepare enough. Right now, things are just a very bountiful summer. We're at all-time highs in the NASDAQ, all-time highs in the S&P 500, all-time highs in the semiconductor index, not quite there in the Mag 7, but you get the picture. It's a bountiful summer. Volatility is very low. It's time to harvest some of these gains, turn it into a little volatility and prepare for winter. Even if it's going to be a good winter, it's going to be great to have this volatility in hand.
Yeah, we are looking at that. And, with the VIX hitting here in the mid-teens, finally coming down into sort of a normalized range. Historically, this has really been a time to really want to own VIX. If you look at this chart here, we've referred this for maybe the last couple of weeks now, but I think it's very prevalent in how the VIX and volatility has been very reactive to news sources. But even more importantly, how much support there has been in the VIX as it gets around just above 15 level, and we're sitting here 16 and change today. So to me, Joe, this is a time to be an ant and prepare and maybe own some volatility against a position, although I'm still very bullish. The last couple of trading days have been really kind of a nice little breakout from a trend where we were sort of stuck in a range between 63.50 and 62.50 in the S&P 500, and it looks like it's kind of busting out of there, but that doesn't mean I don't want to have and look at owning protection as the VIX and VIX futures kind of come in a little bit.
Yeah, I mean, that's what we've been saying for some time, Brian, that there is some momentum, to say the least, is happening to the upside. It makes sense to just participate in that. But yeah, just looking at this volatility, you get these little divots here. That's the time. That's the time to harvest some and look to add in here. That's just the nature of volatility. It's very mean reverting when it's on the lower end of its range. Time to look to add to some. Another way of looking at this, of course, is the skew. It's the difference in between the price of the 25 delta put and the 25 delta call. Whenever that put is relatively cheap compared to the call, it's kind of a sign that people are buying the call, not so interested in buying the put, for instance. And it's definitely a contrarian view. It's very tied to, of course, the volatility in the VIX index. Maybe a leading indicator for us. And this is kind of showing, hey, we're not as low as the VIX here. Maybe we're ticking up here a little bit in here. Maybe it's just a little bit of a warning sign for volatility. Something that we're watching. We watch this index very closely, of course, Brian. So we're just watching the spot here. Are we going to tick up here? And is volatility going to follow shortly thereafter? Another thing to look at, obviously, is the VIX futures. Right now, we got a long time to expiration, so maybe that's one of the reasons why we have a big, steep premium on the front month future. But it's interesting to see, anyways, that the futures traders are expecting volatility to rise from this level.
Yeah, well, the curve is definitely steepened out. I mean, look at where it was. Obviously, 1 month, 2 months ago, it was much flatter. We had the vol spike of April when people freaked out about how much the tariffs potentially could be. That turned out to be just a texture or a lowball offer by the Trump administration, and sort of a reverse course, met in the middle somewhere on that. And so now you're seeing, yeah, you circle right there, and you're looking out to September, and you see how high that future is. And the ants, I think, are preparing to some degree for the winter of September, October, late fall coming around, and getting a seasonal volatility spike. So it's not unusual to see the steepness right now as we head into the second half of the year.
Yeah, but I guess it kind of furthers the point that it really takes kind of someone with a little bit of know-how and expertise here, because you would say, oh, I'll just buy some September volatility, September VIX futures, for instance, but it's kind of already priced in there. So it really takes a little more nuance and someone who kind of understands this, maybe somebody who's been doing this for a little bit longer, to get into the game. But yeah, it is it really goes to show, like, people are out there on the street, Brian, just looking for the right way to protect themselves in this market. It is very confusing. We don't know what's going to happen with interest rates. We don't know what's going to happen with these trade wars. We don't know what's going to happen with these pot wars, which are continuing to disrupt the supply chain. So yeah, there's a lot going out there, and it is a very confusing time.
Yeah. You talk about here the perfect hedge. And what treasury notes could do before in the past, people would use bonds to do that as a hedge. That didn't work out too well in 2022. So there was a big shift to sort of defined risk. And now those defined risk funds are getting killed with this momentum to the upside, because why? All these defined risk funds, they sell away the upside by selling a call, which is something that we don't do and we don't believe in, because we want to own sort of the wings to both sides of the story, right? We want to have some put protection, some protection to the downside, but we want to be able to continue to participate as the market climbs higher. So,
and also just a little more active participation. I wouldn't say we would never consider that, but
yeah,
you wouldn't have like a blanket strategy where we're always going to sell the upside call. Sometimes that's prudent to do after a really significant, sharp, steep rally, and sometimes it's the absolute wrong thing to do. For instance, after the market sold off a lot. So I think a timing and understanding market dynamics is really crucial, not just having a blanket strategy where it's always going to be one way.
Yeah, we've noticed over the years, if you're doing something on a calendar basis or a timely, consistent thing, it works until it doesn't. And then you really have the buyer's remorse and regret that it didn't work. So something to be aware of. But yeah, that's all I got to say on that.
It's data dependent. It's market dependent.
Yeah, right. What else we got here, Joe?
You know what? Yeah. So these IPOs are coming. We've been talking about like this stage of the rally that we're in. We've comparing it to the .com boom, and before the .com boom, it was a big infrastructure hardware build out. It's kind of what we're seeing right now. All the semis are doing fantastic. NVIDIA, we know the story. The data centers, we know the stories. Now we're we're shifting into some of the software companies of the world, and we're going to be seeing these IPOs start to happen. Here's a case where for Figma, Adobe was unable to buy them, putting up enough cash. Now they're going to be looking to going public. We're going to see a lot of these deals, a lot of these IPOs coming in the next couple of years. This is just fascinating to see.
Speaking of Adobe, by the way, I think, man, that's a stock I don't really want to touch.
They're trying. They got a image creator, Dali, I think, but they're not quite there. They're it's very easy to do. Grok can do it just as easy. Gemini can do it just as easy. But yeah,
they need to figure out how to morph themselves into a new branded company using some of their imaging or whatever. Because just making a PDF, I think, is just going to become less and less.
Yeah, I mean, people are talking about AI, cannibalizing Google's search revenue for advertising. I think AI just completely makes Adobe's main business worthless. Personally, I don't know.
That's putting it lightly, right?
Yeah. I think they need major shifts. This would have been an interesting shift for them. I guess they couldn't pony up enough cash for it. But I'm curious to see more companies like Figma coming out there with these IPOs. Now, there are some existing companies, of course, that are big into the AI software One of them is going to have earnings this week. It is now, uh, as in, so here it is, ServiceNow. They're going to have earnings this week. A little bit of a teaser. Hang around for just another 10 minutes or so. You'll get the trade of the week. It's going to come in ServiceNow. I'm bullish for them into earnings, but I got an interesting way to play it to the upside on the very short term.
Yeah, sure. Yeah, that'll be an interesting. I mean, wow, look at that earnings week, really. I mean, Google, Tesla, and Tesla, really, both those names, if you look at the Mag 7, have really struggled. They've been the drag on the Mag 7.
Google's picking it up today in a big way. Google's rocking it.
Yeah, I'm just looking over on my screen. Yeah, that's right, up 2.5% today. Maybe finally playing some catch up. Another big mover, Qualcomm up a little over 2%. Those are a couple of the tech leaders going on right now. You take a look at Google here, and there is that big gap that, I don't know, Joe, you feel like maybe it's ready to fill that gap here and catch up to everybody?
You know how much I love Google. I think it makes sense to come up to here and to this level. We'll see what happens there. But let's take a look at the broader market. I do have a point on like the Mag 7 broadly, because this is something we brought up just a few weeks ago. We saw this market breaking out here, and we were expecting this to continue to the upside. We brought this up at the end of June. We were talking, and yes, we absolutely got that was absolutely the case for the NASDAQ breaking out. The semis are breaking out, obviously. But one thing we noticed back then was the Mag 7 had yet to come up to their all-time highs. And I hypothesized then that we are going to test this level. And then I think the market might be ready. Okay, that might be a time to sell. If you own the Mag 7 index and you hypothetically bought it here, you might be looking to sell it here at break even. So I think that will be a tough spot for the market to crack. That might be a natural spot as people are looking at this momentum piling in, a natural spot for the contrarian overbought signals to happen.
Yeah. This morning, just full disclosure for clients, we actually bought a little bit more VIX futures in our some of our positions here. We have a NASDAQ fund that is a hedged NASDAQ, the hedge being our long VIX futures trading with S&P options and both calls and puts. And so, you look at this here and it looks like maybe a spot really to kind of take a peek. But the S&P looks so strong in that little consolidation range and breakout that, it would be interesting. I mean, this will be a moment of truth. Can the Mag 7 break to new highs with some volume? Can, especially the earnings this week, Tesla and Alphabet playing into earnings, if they break out and have good earnings, that could push the Mag 7 to new all-time highs and push through that resistance level that you're talking here about, Joe. So really a moment of truth, I think, this week for the markets.
Yeah. Just wanted to real quickly point out, yes. So we're coming into September. It just happens, like we had a great run up. September just happens to be a volatile month, for better or for worse. I talked about it in the blog. I'm going to take a look at that real quick. But yeah, it's the start of the school year. Football season starts. We're gearing up for the fourth quarter. People are starting to think about the holiday season, et cetera. The harvest happens in September. I mean, it's just a natural boosting up of human activity. It's always been that way, and it just always is a volatile month. It seems like we get past Labor Day. You got that holiday at the beginning of September, and naturally volatility starts to pick up then. So that's for me what I'd be looking for. Is it going to happen this year? We'll see. It's anybody's guess. But we've had a great run for the summer. And this just seems to happen. We get a little bit of a question. There's some doubting in September. Is the fourth quarter going to deliver the returns? And then October happens and boom, we're off to the races and people remember, oh, tech is good again.
Yeah, for sure. I mean, when you look at it again, I think this resistance level is going to be pretty critical for the Mag 7. Let's see how this earnings plays out. We'll probably update that, maybe even comment during the week. On our make sure you can check me out at Brian Stutland on X or check out at Joe Teague. I'm sure we'll have an update for you, or follow us on LinkedIn as well for some added content throughout the week. Joe, I know you're always on different shows like TD Ameritrade and also Bloomberg sometimes. And so, check us out for some more updates.
Yeah, and there's a lot of big events this week. We're going to have Powell talking to the banking committee. Next week, we're going to have the FOMC meeting. It's locked in. There's not going to be a rate cut this week, but maybe we'll get a lot more color on if there's going to be one cut in September. Right now, the market thinks about 60% chance of a cut in September. So we'll see. We'll see how that plays out. There might be a chance of 2 cuts in September. There might be a chance of no cuts in September. So we're still kind of waiting and seeing and guessing it for all that. But right now, the base case is 2 cuts the rest of the year. That might be something that causes some volatility. Is there no cuts coming? And maybe that's going to cause some volatility. Maybe some of these earnings aren't as good. That's caused some volatility. Maybe these trade deals not coming causes some volatility, but then inevitably, as seems to always happen, we get the relief and then we get a big rally in October.
Yeah, I think it's kind of interesting that, you talk about cuts here, and, obviously Trump has been pretty adamant that, Powell is always too late to the game. And personally, I think he has been. He's been too slow to react. He's just conservative Fed governor, kind of want to put it bluntly. He was hired by Trump. He was kept on by Biden. He moved rates very slow. I would say the one questionable call was why cut 50 basis points right before an election, other than to try and get your guy reelected. But other than that, he's been kind of slow moving to things. And personally, Trump says cut rates, but we still have inflation over that 2% target. So I'm not so certain that we need to cut rates. The unemployment numbers are still pretty good. Now, I will say this, the college unemployment numbers of people coming out of college, I saw a figure, it's up over 7% right now. So that's worrisome on, maybe AI taking some jobs. Maybe there is some slowness and people are a little gun shy to hire new hires and start to train them when there's maybe some uncertainty. So I can see like there are some cracks in the system. I just don't see we're there that we need to cut rates. I really don't. The market's at all-time highs. You don't cut rates when the market is at all-time highs. You don't cut rates when the VIX is below 20. Now, if we get a volatility shock, we get a volatility pop, then yeah, I would have my bullets lined up, ready to go to provide that liquidity for the system. But I just don't think we need it right now.
Yeah, I think Powell's biggest mistake was in 21 when he said inflation is transitory. He said inflation's high now, but it's going to be down really quickly. And he just flat out got that wrong. I think he's worried about inflation. He's worried about like that being his legacy, that he's the governor that like allowed inflation to happen. So I think he's going to be leaning on the side of caution first, even if, it makes sense for Trump to kind of work the referee, if you will, to try to get lower rates to help boost the economy, which he's presiding over. But for Powell, his legacy, he wants to have he wants to not be known as the high inflation Fed governor. So he wants to make sure he gets that squared away first.
Yeah, unfortunately, he's too late to the game on that. He blew it. The inflation's here. Bitcoin wouldn't be at 118,000. Gold wouldn't be above 3,000 if there wasn't serious inflation. The CPI numbers continue to read above 2%. So I think he's blown that. And that's why I rather at this point see him not listen to Trump and not cut rates and wait for better time until we get that under control. But anyways, let's move on here. This is our trade of the week. Now, NOW, the stock symbol, we got a trade. It has earnings coming up on Thursday. You look at this chart, kind of double toppy, kind of, didn't really break back through, retested that like breakdown. So Joe, what do you make of it here? What's it going to do?
Yeah, of course, this is a cloud-based service company. They really are big into like IT helping. They help these they have big contracts with big companies, just helping them just make everything easier. All software based on the cloud. It's a little bit different than Palantir, which kind of manages data within the cloud sector, but it's I think it's similar to Palantir in that it's kind of utilizing the cloud in some software to make using some AI to make companies' lives a little easier. And I think we're in the stage of the economy where it's actually beneficial for now, kind of in two fashions. You would think, oh, if the economy is booming, people will be adding some services, growing, expanding, needing a company like Now. So which part of the economy is booming. There are areas of the economy which is booming. And if you also were looking at an economy that was like slowing down, any part of the economy which were, tightening the belt, looking to cut costs in places, you'd be looking for a company like Now, which can make some jobs easier, maybe eliminate some jobs by some with some of their functions. So I think it's going to be a very interesting quarter for Now. Just take a look here, just one more time to compare it against Palantir. Of course, we get Palantir. It's got a crazy high multiple, 247. Forward PE compared to, we're looking at a forward PE for Now. Now it's got nowhere near the growth that Palantir has, of course, but it does have very steady growth, and it is beating a majority of the time. Right now, we're looking at a company that with over $3 billion in revenue. Again, a little easier for Palantir. It's a little bit smaller company to be growing as fast as it is, but it's $3 billion revenue is still a company with some potential upside here. So for me, I just looking at it here, I'm looking at this implied move here, Brian, of about 7%. That's what I'm targeting to the upside. I think maybe the market makers are spot on. We're going to have 7% upside move. I saw 3 upgrades this week from the analysts, and I'm looking to the upside. And here's how I'm going to do it. Now, volatility naturally is extremely high in this name, so I'm going to be buying a call condor. We buy the July 25th weekly expiration here, the 1,000, 1020, 1040, 1060 condor. That means that I'm looking for a sweet spot in between here, Brad. I'm looking for it to be in between 1020 and 1040. I mentioned I'm targeting that 7% upside. We're at 960 right now, so about a $70 move, $70 move to about 1030 would be the target here. So I'm looking for that sweet spot, 7% move upside. If the market makers are right, this trade will be in the sweet spot and realize its max profit of $17.55.
Just to kind of explain it, I'm just looking up. I just kind of wanted to bring up past historical moves of Now, just to give you a sense of how much it can move. The average move after earnings is about 6.5%. Okay, so now last quarter it was up 15%. The quarter before down 11, but then up 5, up 13, down 4. So the average is right in that sweet spot. And if we hit that average, that's great. But by doing this condor, okay, so you're basically taking a call spread, right, in order to get long. You're mirroring that with a short call spread. So you got a long call spread and a short call spread together. That kind of makes this sort of like pyramid-based structure where you want it to fall in between the 2 short call spread strikes. So, if it gets a 15 or 13% move up, obviously that wouldn't be great because it would kind of just like blow right through our strikes. But I think when you look at the charts, I think that's going to be kind of tough. I don't know, Joe, if you could like go back to the chart here where that, give people an idea of where maybe that upside, blow through might happen. I mean, you're looking at like 1,100. It really would have to make a significant move off these earnings and just really reverse itself for that to fail. So, and then even then, this is not going to expire right at the exact moment. So there might be some opportunity right after the earnings come out on Friday morning before this expires to get out of this trade if it's wrong. Bottom
line is, I could just buy the 1,000 1020 call spread. It's really expensive to do that. But here I am just kind of laying my stick in the ground saying, I think it's going to pin right here. It makes it a lot cheaper to get into the name to the upside here. So I'm not expecting that 15% upside move. I'm not expecting more than a 10% upside move here, Brian. I'm expecting a, modest upside gain here. We've had a big gain recently. As you can see, this 1040 call is around $11. The 1060, it's still about $8. So I'm going to be collecting in here $3.50 here, making this trade, making this overall trade a lot cheaper. Much rather spend $2.50 than $6 to get into this upside.
Yeah, I mean, $2.50 on a essentially $1,000 stock is really pretty cheap shot, pretty cheap lotto ticket to maybe take, that the stock goes up. And then, looking at that right there, the gap down, that's the risk. And that's why I think using some options with some defined risk here into the earnings play to, avoid that sharp gap down. Look, like 2 quarters ago, it dropped 11%. It hasn't really had a significant drop other than that quarter, but with valuations with forward PE at 55, we better get some good guidance. And if you look at the technicals on the chart, lagging a little bit here, I'd be worried that gap down gets covered after earnings to some degree. And so this is a cheap way to play to the upside.
Yeah, absolutely nailed it. So that is the trade of the week. Remember to subscribe to our Trading Zone subscription. You'll get that prior to us going live here. You'll get my idea for the week. And multiple times a week, we'll get updates on all this as we go.
Yeah, along with any other trades that we kind of identify and pop up during the week. So great value. We've tried to keep prices relatively low. Actually, you can go to Tradier, and the Tradier, we're on the Tradier hub here, but you can go to Tradier. You can open up an account, get a $200 rebate, which basically gives you 4 months free for our service. So if you open up an account there, they'll give you a $200 credit applied towards, and then you subscribe to our Trading Zone ideas. We'll give you the service for 4 months. So it's a great way to just try it out. It doesn't really take much of anything. Try Tradier out. They're a great site. I enjoy using them. So we'll be here every week. Monday, 10 a.m. Eastern, just afterwards. We go live. We have about a 20-25 minute show. We cover things from volatility to the markets to our Trading Zone idea. So make sure you come next week. I'm Brian Stutland here of Equity Armor Investments with my colleague Joe Teague. We'll see you next Monday, 10 a.m. Eastern, right here. Check us out on YouTube as well, Equity Armor, or follow us on Twitter at Brian Stutland, at Joe Teague, with more market comment and updates. Catch you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.